Hi, Abiodun. You can start. There was no audio on the
Oh,
video, so I had to stop it.
okay. Thank you, Gloria. So good morning, everyone, and welcome to the 2022-2023 CFA Research Challenge. And today we have a training session, and it's going to be on equity research with focus on process and report writing. So just before I introduce okay, terminal lights on. All right, so I'll be introducing the facilitator today, and I will just enjoin everyone to take the best benefit of this moment. Ask questions. Feel very free to ask your questions. You can raise up your hand so that you can ask your question. Feel very free. So I would like to introduce the speaker, the facilitator, in the person of Damilola Olupono. He's an equity research analyst at Chapel Hill, Denham. So we'll be taking us through the session for the next roughly 3 hours. So Damilola, you can unmute and over to you.
All right. Thank you very much for having me. First, I would like you to confirm that you can hear me.
Yes, I can hear you.
All right. Thank you. Great. Thank you very much for having me. I'm excited to be in your midst today. I've been a keen follower of the CFA Research Challenge, and I must commend the work you guys are doing at CFA, to bring these young lads together and to teach them the rudiments of equity research, valuation modeling. I think is a great one. And over the years, this challenge has given birth to analysts. And this year, I'm also excited that we have very brilliant minds on board. And it will be good to see, how things go from here. So not to waste our time, I'll be taking us through equity research process. And the process involved in writing equity research, and what you should look out for, when writing your CFA research thesis. Just allow me some time to share my screen. All right. Okay. Sorry, I think okay. Please, can you just confirm that you can see my screen?
Yes, I can.
Yes, please.
Right. I'm a graduate of Obafemi Awolowo University, so I would imagine that we have students from Obafemi Awolowo University here, and Unilag, Covenant, Babcock, and the likes. It's good to be in your midst. So we'll just go right into today's presentation. The first thing is, I really want us to understand what equity research is. And equity research, involves the evaluation of companies with the goal of making investment decision. We equity research analysts, we carry the burdens of our clients. And our client, has entrusted us with providing them with investment recommendations on whether or not, they should buy, sell, or hold, a particular securities. And equity research, involves, analyzing the company in all aspects, ranging from its financial performance, from its competitive positioning, company's industry, to analyzing the share price trend of that particular company, and to determine whether or not that company would continue to deliver, stellar financial performance, over the near to medium term. And there are two major approaches, to investment analysis. For investment research, we look at things from a top-down research perspective and also from a bottom-up research approach as well. But for global standard, I think the top-down investment research approach is widely used. And this approach, entails you analyzing things from the macro perspective. You would, if for instance you want to analyze maybe the performance of let's say you want to analyze the performance of Guarantee Trust Bank, for instance, you would first of all analyze the global macroeconomic landscape and see how the trends in the global scene, affect Nigeria as a country. You analyze Nigeria and Nigeria's macroeconomic scene, see how the GDP, the interest rate, affect Guarantee Trust Bank, which is domiciled in Nigeria. Then you now look at Guarantee Trust Bank's performance, in the light of your findings in the Nigerian and the global scene. You drill down to the company financial performance, and thereafter you make a recommendation, as to whether or not to buy, to hold, or to sell that particular security. But I would like us to bear in mind, most importantly, that the overall goal as a research analyst is to provide investment recommendation. And that takes me to the next slide. These investment recommendations, could either be a buy, meaning that that stock is significantly undervalued, and you would be advising investor to take advantage of the opportunity you see. I mean, let's take for instance, GTCO is trading at 20 naira, and after your valuation, you arrive at an intrinsic value, for instance, of 40 naira. You can then communicate your findings to the investor to say, the stock is currently trading at 20 naira. My valuation output, was 40 naira. I think the stock is undervalued. You should be buying, as the market is not currently pricing, the stock appropriately. You go ahead with your investment thesis and you argue for why you think your clients or investors, should be picking up that stock at 20 naira, and you'll also argue for whether or not you think your 40 naira investment recommendation, is realistic or not. At the end of your financial analysis, you could also arrive at a fair value, that denotes or connotes that the stock is fairly valued. So let's take, for instance, GTCO is currently trading at 20 naira. At the end of your valuation analysis, you arrive at an intrinsic value of maybe 20.2 naira. And then you can argue that the stock is fairly valued in the market, and you can be advising portfolio managers, that are heavily concentrated in this stock. You might be advising them to reduce, their exposure a bit, or maybe just hold the stock, if they are not heavily weighted, or maybe not take any action as you think the stock is fairly valued. It could also be a sell recommendation as well. Sell recommendation meaning that the stock is significantly overvalued. So, like the example I gave before, if you twist it the other way around. So let's say GTCO was trading at 40 naira today, and the output from your valuation analysis, depicts that the stock should be trading at 20 naira. Then what that means is market value, is currently higher than where the stock should be trading, and you'll be advising investors to sell that particular stock, because the market price, is somewhat higher than where the stock should be trading. So the point I'm trying to make is investors, rely on your recommendation. So the job of a research analyst, is it's beyond. I enjoy writing. I just want to write about the company. No, it's beyond that. It's a rigorous exercise that allows you to provide investment recommendation to maybe retail investors, that are invested in a particular stock, maybe retail investors that invested maybe 5,000 naira in a particular stock. And you could also be providing investment recommendation as well to large institutional investors, that have invested billions or millions of dollars, in that particular stock. So it's not something you do with levity. It requires a lot of rigor in ensuring that your investment recommendations are properly done. And very soon, as we proceed to what the investment process is, you would agree with me that it's beyond just writing maybe a novel, or it's beyond just writing what you feel or what you think about the company. It's something that should be properly done. And that's the essence of this entire training, that CFA Nigeria has put together. Is for you guys to understand the gravity of what equity research writing entails, and to approach it with that mindset, to understand that whatever company you'll be given to analyze, you should do it properly, because at the end of the day, the assessment would be based on how much rigor has been put into it, would be based on, did you follow the right step, the right process in arriving at the intrinsic value for the company? Are your insights well differentiated? These are the kind of things, they'll be scoring you guys on. So I would like you guys, as we proceed, to pay keen attention. And for those of you, that would be maybe pursuing a career in equity research, very soon, this training or this session, is very, very important. So what is the research thought process? As a research analyst, how do you go about your work? Do you just wake up in the morning and just say, oh, I feel like writing maybe a research report on Zenny Bank, and I just start writing stuff? Is that the case? That's not entirely the case. There is a research thought process. Every research analyst in whatever investment bank or whatever house you represent, you are expected to follow this particular thought process. The first is for you to articulate the purpose and the context, of the analysis. At the end of the day, you ask yourself, is this research report, is it just for informative purpose, or am I writing, like I've said before, to provide investment recommendation to investors, which could either be to buy, to hold, or to sell that particular security? You need to first of all understand the purpose for which you are writing that research report. Aside understanding the purpose, the context of the analysis is also very important. Am I writing a sector report? Am I expected to analyze the sector players, in that particular industry? Am I writing a single company research report? Am I just focusing on a particular company alone? Is this research report a maybe quarterly earnings update? Am I just focusing on analyzing the performance of that company, in a particular quarter? Or am I writing a 5-year investment summary, on a particular company, you need to understand the context of the report. You don't just go into research report writing, haphazardly. You need to understand what the context is, what the goal is before you start writing. You don't just start writing and midway you ask yourself, what am I even trying to achieve? No, that is not the case, because if you understand the context and the purpose for which you're writing, then that will guide you to the kind of data you need to collect. So that takes me to the next point, which is collecting input data. Bulk of what we do in research, especially equity research, is backed by data. You don't just wake up and just start writing about Zenny Bank based on how you feel about the bank. Every statement, every sentence should be influenced by the data you've gathered, along the research process, should be influenced by your discussion with management, should be influenced by your findings in the company's financial statement, should be influenced by the outcome of your valuation analysis, should be influenced by the output, of your financial modeling. You don't just write it because you feel like writing it. That's not what we do in equity research report. That's why the job of an equity research analyst is different from the job of a journalist. For instance, the journalist just writes about the company, based on his own personal opinion or personal views about the company. But as a research analyst, your personal views, are the back burner. What should be at the front burner of your research writing should be your findings, should be the output of your valuation analysis, which to a reasonable extent is scientific in nature. And secondly, you're expected to process the data to highlight, the data points in a manner that would be easily understood. In our own case here, we use, the Excel spreadsheet. You itemize, the financial statement on Excel, and you arrange them in a manner that makes it very easy for you to identify trends, for you to perform whatever analysis you've set out to perform. And the next one is for you to analyze and interpret the process data. When you've gathered the data makes no sense until you've analyzed and you've interpreted it. And mind you, if you fail to do proper analysis, what you end up doing is you end up falling in the pit or the hole that the management of the company has dug. Because one thing you should know is what the business owners or what the management of the company does, from time to time, is to ensure that they represent their financial statement in a manner that puts the company in a good light. So let me take, for instance, if you check the earnings presentation, for most companies, what you tend to see is the good things about the company, and they tend to leave out the negative side or the part that might raise concern or questions, from analysts. So your job is to ensure that you analyze this data to identify the strength of the company and to also identify the company's weaknesses. Because at the end of the day, whatever investment recommendation you'll be making would be a confluence of what you think the strengths are and what the weaknesses are. So you need to have done proper analysis, to ensure that You are able to identify what the strength of the company is and what the weaknesses of that company is. You know, if you don't do proper analysis and you just pick the figures, you know, at face value, you might be missing out salient information, you know, that would help your clients make the right investment call or investment decision. And more importantly, which is what this session is all about, you know, you need to develop and communicate the conclusions and recommendation properly. I mean, what's the point of doing proper analysis if you are not able to communicate the analysis in a manner that the end users, which is the investor, which is your client, would be able to comprehend? And this particular point, you know, is very, very important, because at the end of the day, you realize that what might differentiate the winner or the winning team, you know, from the first runner-up or second runner-up in this particular competition might just be the way you've gone about communicating the outcome of your analysis. So it's very, very important. At the end of the day, after spending so much time and effort, you know, into analyzing the financial data, you know, I've gathered, I want to be able to communicate it in a manner that is easily understood, you know, by the end users, you know, which are the clients. So you want to pay attention to your writing style. You want to pay attention to the length of the report. You want to pay attention to the use of language. You want to pay attention to basic things, you know, like the font size, the look and feel of the report. You know, you want to pay attention to those things, because at the end of the day, you want your client to be confident in the outcome of your analysis, and the way you present and communicate, you know, your conclusions, you know, goes a long way in determining whether or not a particular client will want to rely on your research report for his or her decision making. So it's very important. And the next step is for you to follow up. And follow up means you repeat this process as often as possible. And the reason why you're doing this is to identify change in events, you know, that could materially affect your investment recommendation. So from time to time, maybe on a quarterly basis, you want to repeat this process, you know, as often, you know, as possible. Now, the next slide, you know, this slide speaks to the stages, you know, involved in equity report writing. You know, like I said before, you don't just wake up feeling all fine and funky and just start writing things, you know, from the top of your head on whatever company, you know, you set out to analyze. You know, there are stages involved in equity report writing. And as much as possible, I've tried my best, you know, to break down these stages, you know, for us to understand. And the first one is macroeconomic analysis. And for those of us, you know, that studied or that are studying economics in school, you'll agree with me that if my memory serves me right, the micro economic analysis, you know, speaks to trying to understand a unit of firm, or speaks to individual households and all of that. And all of these components, you know, exist within the macroeconomic framework. You know, the macroeconomic framework accommodates, you know, the individual firms, the individual households, and whatnot. So because you'll be analyzing a particular company, which is domiciled in a particular country, and the country is domiciled maybe in a continent and in the world, it's good to understand the macroeconomic landscape and how it affects that particular company you're analyzing. So as analyst, you are expected to do thorough analysis, on the macroeconomic landscape, understand macroeconomic trends, how has the economic growth, for instance, trended, over the past 5 years, and what's your expectation, for the macroeconomic outlook, maybe over a 5-year period, and how do you expect that to affect the performance of the company you are looking at, at that particular time. So it's very, very important that let's take, for instance, you're analyzing banks. It's very important you understand what the exchange rate regime is. It's very important you understand what the currency outlook is. It's very important, you understand economic growth and how that will affect the bank's financial performance, over the medium to long term. If you're analyzing maybe Nestle, maybe Cadbury, maybe Okomu, Presco, it's very important you understand what the inflationary environment is and how that has affected the cost of doing business of the company you're analyzing at that time. Because whether you like it or not, if there are inflationary pressures, for instance, the company would report higher cost of sale, which might impair profitability, over a certain period of time. So you don't just go straight into the company you're analyzing. It's good to understand the macroeconomic framework that the macroeconomic framework that guides the operations, of that particular company, you're analyzing. You need to do that even before going into deep analysis of that particular company. The second one is for you to review the company's information. The first one, that's the step one, is for you to do thorough macroeconomic analysis. Step two is for you to review the company's information. And how do you go about doing this? You do this by, for instance, downloading the company's 5-year historical numbers. So let's say I want to analyze the company's financial performance maybe in 2022. In 2022, first of all, I will go as far back as, say, 2017, download the company's financial statements, download other company materials, like the company's earnings call transcript, just to see what management, has said, to the investment public, and to see how management, has responded to analyst questions, in the past. This will go a long way in also answering some of the burning questions you might have, and it will also help your understanding of the company, on a deeper level. It's also good to study the company's maybe annual financial statements. Depending on the company you're looking at, there is always a maybe a macroeconomic overview, where maybe the chairman or the CEO of the company, has narrated how the macroeconomic framework, in that particular year, or the macroeconomic challenges in that particular year, has affected financial performance. You want to read stuff like that to understand how the company's numbers, respond to maybe macroeconomic variables, or to understand key trends, in the company sector, or to understand new investments. These things are contained, in the company's annual accounts, and it's good for you to spend time, reading some of those statements. It's also good to read stuff like notes to the account. The notes to the account, in provide detailed information about certain line items, in the company's financial statement. So let's take, for instance, you open maybe Nestle's financial statement, for instance, and you see a line item called cost of sales. If you go to the notes to the account, you would see how the company's cost of sales, is broken down. And that would then help your understanding of the major driver of the company's cost of sales. So you won't go about disturbing yourself on maybe irrelevant stuff, because you understand what constitutes the major driver of the company's cost of sale. Let me give you an example. If I go to the notes to the account and I realize that diesel and wages, accounts for 99% of the company's cost of sale, and electricity, okay, and maybe stuff like stationery only accounts for 1%. I won't go about wasting my time, trying to understand the driver of that stationaries, because you only account for just 1% of the company's cost of sales. So I'll channel my effort, channel my energy towards understanding maybe the driver of the diesel cost, diesel prices in the market, because that accounts for bulk of the company's cost of sales. So it's very important that you don't also neglect stuff like the notes to the account. You also pay attention to them as well. You also read stuff like press release. From time to time, the company is always addressing the press, new investment, latest event, within the company. And generally speaking, it's just good for you to comb the website of the company, to sieve out salient information, that can help in your investment recommendations. So you also look out for news items, in the media, in the newspaper, on industry news or events, that can shape the company's financial performance, going forward. Step 3 is for you to assess the competitive landscape of the company. So let's take, for instance, if I want to analyze the performance of Access Bank, I would not look at Access Bank in isolation. I would also understand I need to also understand the entire banking industry, and to understand what Access Bank's competitive positioning is. Is Access Bank the market leader? How is the fight for market share in that particular industry is? I'll understand stuff like, are there new entry, into the industry? What potential threat will those new entrants into the industry, bring? It's just very good for you to understand what the industry, what the industrial landscape, of that company is. It helps in your investment recommendation as well. It helps in identifying potential risk and identifying, threats to the company's maybe business in the foreseeable future. In the event that the company is losing market share to competitors, it's a major point, to highlight. And step 4 is company valuation analysis. Apologies for the typo. After you've done all of this, you now use various valuation metrics, to arrive at the intrinsic value of the company. You cannot, the best practice is for you to value the company using various valuation methodology. Then in arriving at your intrinsic value, you might now then pick maybe a valuation method, that's best suited for the company's business. But it's always very good, for you to maybe use 2 to 3 valuation metric. Then you can now settle for one, or better still, use a blend of various valuation methodology as well. After you've done this, you submit this to maybe your supervisor at work or to your line manager, depending on which case. And the reason why you do this is to ensure that there is adequate quality control. So you're submitting this for a second level check to ensure that the report is written and is done with utmost quality, and you are not misrepresenting the company to the investors and the outside world. And the step 6 is for you to distribute the research report, to the firm's client and potential investors. And step 7 is for you to carry out ongoing analytical review, which entails repeating step 1 to 6, on a frequent basis. Now, for the purpose of this research challenge, their essentials, their equity report essentials, there are things, there are essential ingredients that must feature in your equity research report. Although there is no universal standard as to what should be in your equity research report, but CFA requires that these basic things should feature in your equity research report. And the first one is basic information about the company. So if I pick your equity research report, at a glance, I should know the company you're writing about. I shouldn't spend the next 3 minutes trying to figure out what company you're writing about. So at a glance, I should see, is this report about Zenny Bank? Is this report about Sterling Bank? Is it about Nestle? Is it about Cadbury? I should see it as a glance. Your research report should contain basic company information. Basic information like the company's name, what's the company's ticker symbol. As you know, like I said before, the research report, could be to retail investors, or they could be to sophisticated institutional investors. And these investors, are interested in the company ticker. It should also tell us, where is this company listed? Is it listed on the Nigerian Stock Exchange? Is it listed on the London Stock Exchange? If I want to take an investment action on the company, your research report should tell me which of the exchanges I should be taking the action on. You get, is the company listed in London, listed in US, listed in Nigeria? I should know from your research report. I should also know the primary industry, where the company operates. Okay, it's not enough for you to just write Cadbury Nigeria PLC. Is Cadbury an FMCG company? I should know at a glance, when I look at your research report. I should know if Cadbury is a banking sector company, for instance. This little information should be contained in your equity research report. I should also know what the stock price is as at publication date of that company. So it's not enough for you to tell me my target price for this company is 50 naira. I should be able to see at a glance what the current market price of that company is, and even provide additional detail as to what the market capitalization of the company is, and basic, I mean, the whole essence is just provide basic information about that company. So at a glance, I can understand what company you're talking about, and also give basic business description about the company. You know, like I mentioned, what industry does the company play in? Basic business description like what's the company's revenue, what's the driver. I mean, just basic information you can pick from the financial statement of the company. You know, at a glance, I should be able to see what the company's revenue is, what the breakdown of revenue, for instance, what the cost is, see basic financial ratios, you know, like maybe what the ROE, the ROEs, you know, at a glance, you know, once I pick your research report, I should be able to see those things. You don't want your client to go about by himself, you know, trying to compute what the return on average equity is, or trying to compute, you know, what the debt to equity is. There should be a small table, maybe by the side, or maybe at the end of your report, you know, that gives basic information, you know, about the company's numbers. And secondly, when I read your research report, I should understand what the industry overview is and what the competitive positioning of the company you're writing about is. Is this company the market leader? Do they control the largest market share? I should be able to decipher this basic information, you know, while reading your report. And a good way to go about this, you know, is by employing the Porter's 5 forces a model, you know, that helps you understand the competitive environment of the company, you know, helps you understand who the major suppliers of the company is, and whether their supply bottlenecks, you know, that could impair, you know, the company's financial performance. Understand who the major customers of the company is. Let me give you an instance. For a company that has not so diversified customer base. So let's take, for instance, a manufacturing company that has a single customer, you know, accounting for 70% of the total sales. It's important I understand who that customer is and whether or not they are threat to that customer's going concern. And the reason I need to understand it is because that customer accounts for a large portion of overall sales. So if you're just writing about stuff about the company and you don't tell me about that major customer, then you haven't done me any service. I need to understand what the going concern of that customer is, and to understand whether or not the customer's patronage, you know, in the medium to long term would be affected. So that's why it's very good, you know, to employ maybe the Porter's 5 forces model, to also understand, you know, what the substitute are, the barriers to entry, and the regulatory framework is. I'll give you an example. Let's take, for instance, you are analyzing a consumer company. You need to understand what the regulatory framework is. Regulatory framework regarding things like taxation. I mean, just recently we saw the federal government, you know, raise the value-added tax, and you know, they've made. I mean, we just saw the new Finance Act. It's good to understand how some of these things affect the company you're analyzing. So it's not enough to just say, yes, this company grew revenue on a year-on-year basis. It's also good to understand how the regulatory framework affects the going concern of that particular company, and whether or not changes made to the regulatory framework would impair the company's profitability going forward. So it's very good that you do detailed analysis of the company's environmental and industrial positioning. You should also have an investment summary that shows brief description of the company's, significant development. Your investment summary should show maybe an abridged earnings forecast, evaluation summary, and what your recommendation is. So at a glance in your investment summary, I should be able to see all of these things and know, this person wants me to buy this company. This person wants me to sell this company, to sell the stock of this company. So it's very good that your investment summary contains this information, because at the end of the day, your client or whoever would be using your research report might not have the luxury of time to read the 10, 20 pages you've written. So your investment summary should, at a glance, communicate the key things you've highlighted in your research report. And you should also do valuation analysis as well. So your research report, after your investment summary, I should see what valuation metric you've used, the outcome of your valuation analysis. I should see the various assumptions, that feed into your valuation analysis. What risk-free rate did you use? What was your cost of equity? The various assumptions, that underpin your valuation outcome. I should be able to see it in your research report. After reading your research report, I should not be calling you to say, sorry, what valuation metric did you use? Or what was your fair value estimate? I shouldn't be calling you. It should be contained in your research report. And your research report should demonstrate that you've done proper financial analysis. This would show the level of insight, that you're able to display, in your research report writing. I should be comfortable with how deep you've analyzed the company. After reading your research report, I should have some level of comfort as to how detailed, your financial analysis is. So it's very, very important. Your research report should also contain investment risk as well. It's not enough for you to tell me to buy or to sell a particular company. You should tell me what the investment risks are. Let's take for instance, you've told me to buy a particular company, and the company is an oil and gas company. And from your findings, you think the ongoing Russian-Ukraine war could affect, maybe for instance, crude oil prices, and you think the risk emanating on that front would maybe in 2 to 3 years, affect the company's performance. You should highlight such risk in your research report. So risk that can affect the going concern of the company, risk that can affect the company's financial performance. Things like this should be contained in your research report. And very important, you also need to analyze the company, from an ESG lens as well. What's ESG? That's environmental, social, and governance analysis. You need to also do that analysis as well to understand whether or not the company's operation is affecting the environment negatively. So let's take, for instance, fine, this company is a fantastic company. They are making money. The profitability metrics, are wonderful. They are very attractive. But then, as a result of this company's operation, we've seen maybe air pollution, or we've seen the company's operation, is causing environmental hazard. You should be highlighting stuff like that and should be making it known to investors that whilst this company is a profitable company, we think this company's operation is causing havoc to the environmental landscape. You should be saying things like that. So it's also good to also assess the company from an environmental, to see how environmentally responsible that company is, and to also understand from a social lens as well, whether or not this company has been able to impact its immediate environment, positively, to assess the quality of CSR, corporate social responsibility things, that the company has done, in recent times, to see whether the company is socially responsible as well. And also from a governance standpoint as well, the CFA Code of Ethics, has laid out various ethics and governance, as laid out, various governance framework that companies should follow. So you also want to assess the companies from a governance standpoint as well, to look at stuff like diversity, the company's board of directors, is there a gender balance, in their board of directors, in terms of governance, to look out for things like, does the chairman double as the CEO of the company? Does he double as the CFO of the company? Just to see whether from a governance perspective, that company is responsible. So these are key things that must feature in your research report. I mean, they are not limited to these things. Outside of these things, you could include some other important detail, in your research report. But at the very least, your research report should contain this essential information. So what are the do's and don'ts, when writing equity research reports? You're not writing a novel. Neither are you writing a poem. So, I mean, in a novel, you will expect that the climax, should come at the end. However, in the research report writing, we are expected to have an investment summary that you can see at a glance, or maybe the first page of your report, as the basic information you want to convey to your client. So let's take, for instance, I shouldn't read your research report, and it's until when I've gotten to the last page, maybe the 20th page, I now see that your recommendation is a buy. At a glance, immediately I open your research report, I should see what the recommendation is. Are you telling me to buy, sell, or hold? And after seeing that, I should be reading. What should follow is the driver or the explanation of why you've recommended the buy or why you've recommended the sell. You should also follow the KISS rule as well. Keep it straightforward and simple. This is not an academic project work, where you review literature, what other things do you do again? You write about your investment thesis, you're just going back and forth. In the research report, you keep it straight and simple. It's expected that for an earnings update, for instance, you should always keep it between 1 to 2 pages at the very minimum. But then for the purpose of the CFA Research Challenge, I understand that you guys had to write as much as maybe 10 pages, or as the guidelines stipulate. But the point is, keep it straightforward and simple. Go straight to the point. Don't beat about the bush. If you are trying to say something like the company's financial performance is not good, you should say it that way, or maybe in a better way or in a more concise way. You shouldn't go about saying, if not for, just avoid, keep it straight and simple. Your report should be timely, because at the end of the day, investors, clients use your report for decision making. So it's very important that your report, publication of your report, are timely, to help your clients make timely investment decisions. And always be precise, with the point. Your audience is expected that your client is sophisticated and professional. Except you're writing maybe for retail clients, that might not understand. In that case, you might water it down, and your use of language, might speak to them. If you are addressing a sophisticated clientele, and it's expected that you go straight to the point and you're precise, there is no point beating around the bush. If you can explain a particular point, just using one word, it's better you use one word than you writing a whole paragraph. Then the style as well, your research report should be jargon free. Writing things like the company is a jack of all trades. You should avoid, this kind of jargon, be professional as much as possible. Your research report, when writing research report, this is not the time for you to show that you can write like Shakespeare, and start using certain words or certain language style. No. As much as possible, be concise, be clear, and be straight to the point. So avoid jargon as much as possible. I don't want to read your research report and every line I need to start checking the dictionary because you are using big words. Your research report is not the time to show off. It's serious business. You want to make it as simple as possible and straightforward. There's a saying that an appropriate picture, is worth 1,000 words. So if a chart or a graph would better describe or will better describe a particular point, then you're better off using a chart or a graph. There is no point, writing 3 pages, when in one chart we can see what you're trying to say. Even when you describe, that particular point, in a paragraph, you might just want to slot in a chart just to help the readers or to help, your clients understand what the trend has been. And at a glance, they can just understand the point you're trying to make. So it's very, very important that you abide by these rules and you keep your research report, as simple, as possible. I've just put here sample research report, from Chapel Hill Dynam. As you can see, the research report, at a glance contains the basic information. The name of the company is there. The first page, contains the recommendation. In the first page, I can see what the target price of the company is. In this case, at the time, the target price was 487 naira. I can see what it is. I can see what the Bloomberg ticker is. I can see what the current share price is. Just in the first page. I can see what the investment recommendation is. I can see basic information about the company. At a glance, I can see what it is. And there is also a small table, underneath, that just shows key numbers about the company's revenue, cost. It's very important that your investment summary, contains basic information about the company. once I read your investment summary, I should be able to understand the point you're making. I should read your investment summary and understand, oh, this guy wants me to buy. So it's also expected that in the research report, you guys will be producing, you should have something that summarizes what you're talking about. That brings me to the end of the presentation. I'll hand over to the anchor to see if we have questions, clarifications, and all. Thank you very much. I'd just like to find out if you have questions or clarification from participants. Yeah.
So far, thank you very much, Damilola. So far, there are no questions in the chat box. I think, okay, someone asked if they will have a copy of this presentation. I'm not sure, that's at your own discretion anyway, but would send a copy of this recording to them after the class.
That's the end of my presentation. I'll just stick around to see if you have questions.
Okay, can you hear me? Just to be sure, my network is a bit unstable.
Yes, I can.
Okay, so Osaru asked, please, between PowerPoint and Word, which is better for presentation of a research report?
Okay, I'll answer in two folds. For the purpose of the CFA Research Challenge, I think you need to speak to the team to know which you are required to do, if it's a PowerPoint presentation or if it's a Word document. So it's very important you understand that. In practice, you can use either of them really. Although what is common is to use the Microsoft Word and to design it in a very nice way, and then you can write on it and just use that as your template. But then I've also seen cases where people use PowerPoint, and at the end of the day, you might not be able to know whether it's Word or not. So it's pretty much at your discretion. Someone asked that, can we get across to you during this process to ask further questions? And how can we reach you? Yeah, you can reach out to the CFA team if you have questions and answers, and they will direct you on how those questions will be addressed. Someone is asking, what is the maximum number of pages to write in a research presentation? For the purpose of the CFA Research Challenge, you'll be told the maximum number of pages to write. But then, outside of the CFA Research Challenge, it's advisable you keep your research report as short as possible. So if you can communicate your views in one page, it's better you keep it at one page. You can do it in 2 pages, it's better you keep it at 2 pages. There is no standard that says it must be this number of pages, but you're just advised to keep it as short as possible. But like I said before, for the purpose of this challenge, the team would get back to you on the number of pages you'll be required to write. How long are we going to be given to complete this report? I guess a member of the team would address this particular question. I don't know if Gloria wants to address this.
Yeah, Sorry, my network threw me off completely. But I did hear the first part of what you said. Can you hear me? Just to be sure.
Yes, I can. Yes, I can hear you.
Okay, you are right. For the report, the first report, there is a template we send to all the teams. It is in Word document format. So it's not a PowerPoint presentation. There is a document, a template we send to them in Word for the initial report. Then after they've passed through that process, for the main presentation to the judges, that would be in a PowerPoint presentation. So that's how it is. I believe you were still on that question, right? Because I was
Yes.
cut off.
I'm Gloria. Someone asked that how long are we going to be given to complete this report? So I think you might want to answer that as well.
I'll need to confirm from every year we set this timeline, so it may not be exactly the same as last year, but there is usually up to I think if we let's say between now and December, because we are planning to hold the final competition in Q1 of next year. That's between January and February. So we usually, like last year, we gave till December, so there is enough time, about 3 months, to work on the report. But the exact deadline will be communicated to the students and the faculty advisors directly. We get confirmation from the University Relations Committee.
Okay. Thank you.
Then there is a hand raised, Martins. Martins, I'm going to ask you to unmute so you can ask your question.
Yes, thank you very much for the session, Damilola. So I just want to ask with regards to the ESG aspect of things. So one challenge I'm seeing even ahead of getting into the research is the availability of data on like ESG and standards actually. So like globally standards are being set, but there's been no specific agreed upon standard. We have some key things that everyone looks for, but we don't have very, very specific standards now for ESG. So I just want to ask, like, if you're having issues with data and kind of like getting specific data for the company, is it okay to use the industry as a proxy and drill down then to kind of like use industry overview if we can't get a specific data for the company? Now, what would you recommend if you're having issues getting the data for ESG for companies?
All right. Great question. So if you check for Nigerian companies, if you check their annual reports, there is a segment dedicated to reporting on ESG. So I think you can work with that. There's a segment dedicated to reporting on ESG. I mean, the report will tell you what the CSR, the CSR, the company embarked upon, that year. You can even check and see how they compare with competitors, because their competitors will also report same as well. You can see, for governance, you can see things like the board composition, for instance. It will be in the annual report. You can research to know what the environmental impact of the company's operation is. These are things you can do. So I don't think you necessarily you would need to use the industry ESG report as a proxy. Each company is mandated to do report on its ESG activities for that particular year in its annual account. Are these information sufficient? That might be another debate. Do you understand? But then I know there's, some levels of ESG reporting, for most of these companies, in their financial account or in their financial report. Yeah.
Okay. Thank you. Thank you, Damilola. There are two more hands raised, but I wanted to take some questions from the chat box before I unmute them to speak. So the session will be has been recorded. We are going to share a link to this recording to everyone later today. Then there's a question for you from David Icha. I don't know if you answered that already. He says, can we get across to you during this process to ask further questions, please? And how can we reach you? Also, that's also at your discretion, please.
Yeah, so I already mentioned before that if you want to get across to me, I would advise you get across to the CFA team. Then you can reach me through them because I understand that there are rules and regulations regarding engaging maybe people outside of the mentors you've been assigned and all of that. So yeah, I would advise you go through them. Then they would advise you on how you can reach me if need be.
Then in addition, every team will be given an industry mentor. So you are not alone. So apart from the guidance from a faculty advisor, you'll be given an industry mentor, someone who is working in the industry to guide you. So that person would be your go-to person for any questions or support you need. And you can always reach out to CFA Society Nigeria. We would see how we can help you with any challenges you may have. Then, okay, so Wisdom asked, in your presentation, you didn't mention the target company we'll be working on. So I have the answer to that. The subject company for this year is the Okomu Oil Palm Company. We just confirmed that some days ago. We are going to send details by email to all the students, and also we'll share it with faculty advisors in our WhatsApp group as well. Then please, I'm going to unmute Mr. Wasiu, FA for Unilorin. I'm going to unmute you now to ask your question. Mr. Wasiu, are you there? You should be able to unmute yourself now. Okay, if you're
Good afternoon. Good afternoon. Yeah, I want to appreciate CFA Society Nigeria for doing this wonderful training, and also to appreciate Damilola for a wonderful presentation. My question is just straightforward. Thank you for taking us through the steps in report writing, equity research. But my question is on valuation. You can understand with that there are different categories of companies or target companies, and which may affect the actual appropriate valuation method. So how do we determine what is the appropriate valuation method for a target company? That's just my question. Thank you.
All right. Thank you for that question, Mr. Wasiu. It's a great question. So in determining the valuation method, yes, you're right. Different companies, different industries, have their own peculiarities, and the valuation methodology, also has a part to play in determining what the intrinsic value of that company would be. But this is how I look at it. For the company's mode of operation, most likely will determine the kind of valuation metric you will employ, and I'll explain further. For a bank, for instance, that earns bulk of its revenue, from its balance sheet, then you'll be looking at a valuation metric that values, the bank's balance sheet, rather than earnings. The current reality of the company, also informs the kind of valuation methodology you report. A company, for instance, that pays dividends, you might want to use maybe a valuation metrics, that has dividend, as one of its input. If a company doesn't pay dividend, for instance, I don't expect you to use a dividend discount model, because the input in your valuation methodology, you understand, will be incomplete. So the company's financial reality, the mode of operation would determine the kind of valuation metric you would use. For an oil and gas company, for instance, where you'll be valuing maybe the company's oil well. Do you understand? Because of their mode of operation, that would inform the kind of valuation metrics you use. If it's a simple FMCG company, for instance, you might just want to use maybe a simple DCF valuation metric, that just uses the company's income, that values, the company's income and discount it, over a certain period. So I won't say that there is no right answer as to which valuation method you use. But then as you carry out findings of this company, you understand the company's financial realities, then you know, okay, I think I should use this, I think I shouldn't use this. So I would say the first point of call is go and read about different valuation methodologies, understand the company, then see which valuation methodology best suit that particular company. So there's no straight answer because it depends on which company you're looking at. I hope I've been able to provide a bit of clarity.
Yes, thank you, Damilola. Thank you.
Yes, sir.
Okay, so there is a question from David. I don't know if you answered it yet. He's asking, are we limited to seeking the return on equities? Can we extend our findings to other performance measurements?
All right. You're not limited to any key performance metric like return on equity. You're not limited to that alone. As much as would help you make an informed decision on that company, then you are expected to evaluate different financial metrics. Do you understand? So go ahead, look at what the return on asset is, look at what the debt to equity is, because you want your analysis to be as thorough as possible. If you only use one performance metrics, you might run into the error of carrying out a shallow financial analysis on the company, because different financial metrics
Recording in progress.
Hello?
I think.
Can you hear me?
I think. Okay. Yes, I can hear you.
Yes. Sorry about that. I lost connection for a bit. So I was just saying that different financial metrics test the financial strength of the company, on different scales. So you don't want to limit yourself to just one financial metric. You want to ensure that the company passes the solvency ratios, the solvency test. You want to ensure that the company passes the liquidity test. You want to ensure that the company passes the profitability test. You want to ensure that the company passes the governance test. So in doing this, if you restrict yourself to just one financial metric, you won't see the global picture. So it's very good for you to look at different financial metrics, and at the end of the day, arrive at a particular conclusion as to whether the company is good to invest in or it's a bad company to invest in. Yeah.
Okay. Thank you for that. There is a question from Mesoma. In the course of this, are we going to make use of realistic data to carry out analysis?
definitely, as Gloria mentioned, you would be analyzing the Okomo Oil Palm PLC. You are not expected to use fictitious data. You are expected to use the real financial statement of the company. So you are not developing maybe a prototype of what you think the financial statement would be. You are expected to follow these steps I've outlined to you, and to use the company's financial statement in analyzing it. So, yeah.
Okay, I'm taking a look at the chat box too. I think there was one question I missed. Okay, from Rashid, can you give us an insight on how ESG is integrated into financial model, and how do we source for the data? I believe you answered the second part of that question when you spoke to another question. Yeah, but insight on how to integrate that in financial model.
Okay, how to use ESG. So the first point of call is for you to understand, for instance, what the governance framework of Nigerian companies. So since, I mean, they say you'll be analyzing Okomo. Okomo is a Nigerian company. You need to understand what the governance framework and what's expected from a Nigerian company, you know, from a governance perspective. So if you understand what's expected of that company, then you can now appraise that company. So let's take, for instance, on a governance level, the company is expected to have this number of directors. The company is expected to have this level of separation of power, for instance. If that's what the regulation says, or that's what the governance framework is, then you can then evaluate that company to see if they tick those governance benchmark, whether they fall short, or whether they surpass, or whether they're just at par with the benchmark. That's how you appraise them. And when you're giving your recommendation, you would then say, oh, this company, assessing this company, you know, from a governance lens, we think this company is a good company. Do you understand? Environmentally, it's very easy. You do research to see whether the company's operation is harmful, or whether the company's operation, you know, has wreaked any environmental havoc, whether in recent times or historically, and to see if let's take, for instance, the company says they want to diversify to this area of business. You want to see if that new investment, or if that diversification would cause harm to the inhabitants of community dwellers, you know, within the company's geographical location. I mean, that's how you assess the company from an environmental standpoint. And from a social standpoint, highlight what the CSR of the company has been, and given the company size, have they done enough compared to peers? Are they lagging behind, or are they doing a lot more? I mean, these are ways to evaluate this. I don't want to give you answers to the question, but I believe you are able to get one or two on how you can go about your ESG analysis.
Okay, thank you, Damilola. So there's a question from Uchenna. I think this one is for us. Thank you. Please, will it be possible for students to have a group so we can easily share information and connect with each other? So there is no WhatsApp group for students, but we have a forum on our website. So I think what we are going to do is we'll create a section, a group for research challenge on that forum, and we'll include the link in our next email to you so that you can chat on that forum. It's on our website. We'll just send a direct link to you so you can have open conversations if you want to. Then I don't know if there are any other questions. Are there any other questions before we wrap it up here? Okay, so in the absence of any other questions, I would like to say a very huge thank you so much to our facilitator, Damilola Olupona. Sorry if I murdered your name. We are really, really grateful that you took out time on your weekend to take this boot camp. We are really grateful. Thank you so much. Then just final housekeeping. We also have a financial statement, another bootcamp coming up on Saturday. I think that's going to be on the financial statement analysis for all the teams. So that would be next week, Saturday. We already sent the link to you, but we are going to still, send another reminder in the coming days. So please tune in. The session is going to start at 10 o'clock next week, Saturday, 1st of October. So please tune in and encourage your team members to join the call as well. Thank you very much, and do have a great weekend.
Thank you, everyone.
Thank you. Have a good weekend.
All right, bye.